Hey, what's up? What's up? Good morning, everyone. Hope everyone is well. Hope you've had a wonderful week in the markets this week. It's been a really quiet week, mostly for me. I don't know about the rest. I bet for almost everyone in our team. I don't know about you guys. It's most of the dollar pairs that we trade, the major pairs have really been consolidating. So nothing much has been happening. Just into that sideways movement, making putting more emphasis on the dollar index, which can give you a wide range of what is happening on the other dollar pairs. The market has been ranging. The only market for me which has really been moving is USD CAD. So USD CAD is a pair that has been moving. For those people who trade gold, gold also has been really moving. But for me, I have three pairs. As I told you guys, starting of the month, I just have three pairs for this month. That is USD CAD, GBP USD, and Aussie dollar. So the rest of those other pairs that I'm not looking at right now, I'm just paying attention to these few. So today as we start, I'd recommend a video that I really want you people to go and watch when you get time. That we posted it some time back on our YouTube channel, so I'll suggest that. And then we'll look at the charts, then Ken will come in, show you what he's looking at. Just to end the week. As usual today, there's nothing much, it's just reviewing how the week has been. So starting off, I'll show you, and as usual, any question you can ask on the portal. So before we jump into the chart, as I was looking at a few pairs here, I'll go to our channel. So if you don't know, we have our channel on YouTube, Financial Hub, Forex Education, Building Profitable Traders. So we have our YouTube page, or rather channel, called Financial Hub. And the video I'd recommend for you people today, as we end the week, is this video here, the Sphere of Silence. Okay, so if you get time, watch this video, Sphere of Silence, where we talk about the importance of silence. Here you go. So get time, watch this. It might really help with your trading analysis in future. Being patient enough to wait for a few things to happen. So it's a really nice one that will help you in discipline. If you can get time, you can also get the book. So that's what I'll recommend for you guys this weekend. And let's jump straight into the charts. So what I've been looking at this week is GBP USD. As you can see, up down, sideways movement. Market hasn't moved since the week started. We've been just within this ranging zone. Okay, so this is the 4-hour chart for anyone who's asking. If you look at the daily chart, we've been stuck at this level for so daily chart, what you're seeing here, we've just had this sideways consolidation, a lot of noise. That's why I've not really been participating in this pair this whole week. Look at this market structure at this level. A lot of noise at this level. Okay, so daily chart, still looking at the big picture, we're still within this channel formation. If the channel will continue being respected, there's still a lot of upward side potential on this pair. But if you go to the 4-hour chart, now you can clearly see that ranging market. Okay, so this is where I have highlighted the ranging zone. So if you don't take care, you can lose a lot of money within this level. So market has just been moving sideways. So the best thing to do is, if you're not trading within this channel, basically when you're trading within our channel, you're trading this previous support and you're targeting the previous the resistance level. And if you're shorting at this level, you're targeting this level. But sometimes it can be dangerous because market can really fluctuate in between. As you can see what happened here, market was just fluctuating in between. Previously here we had this strong sort of breakout that really showed that the market was going to drop, and then came back in, didn't get that much momentum to go to new highs. We're just consolidating within this region. So if you use Fibonacci, you can see I've written here with 3 target. Okay, where that came from is that I took this previous this is my waves, this is the wave count I'm having. So I sort of have this 1, we got into this 2 correction, this whole 3 was an impulse wave, so this was the 3rd wave. So sort of now we're in this consolidation, and if the market gets that momentum, we still have way up to go to the 5th wave. So the 3rd target, this was Fibonacci. For people who use Fibonacci, 161.8 was a perfect target starting from this 2nd level. Okay, so mainly there's a certain market structure that normally forms after a very strong impulse, and that is a consolidation. Okay, so we don't get that deep quick correction. What happens is market sort of enters into a consolidation, and many people get confused that the market is not really getting any direction. And what happens after that, the move that comes next gets people unaware, surprise. So what can happen in this one, what I'm watching, which can be a move for next week, I'm not trading this today, no need. The best thing is to wait for a breakout of the upside or the downside. The downside, if we break it, I'm watching this trend line. Okay, so I'm just watching this trend line to see if market will get to Fibonacci 38.2, using this as my previous starting of the Fibonacci wave. And then I'm waiting for a correction to touch this, maybe get that third bounce before we move further up. If we break to the upside, then that will confirm that this market has broken out of this range, not waiting for that bounce of this level, and market can continue going further up. But I think the best risk reward trade for this one is waiting for a correction down to 38.2, which is in line with 1.29 support level. Okay, so that's what we have on GBP USD. So a lot of noise. Don't disturb yourself trading that today. USD card has been respecting this channel formation that we've been having, sort of completing a certain wave that I'm watching, which I won't get into that this week. I'll do it next week because I'm just reviewing a lot of what has been happening. So if you have this channel, USD card, beautiful channel that market has been. We've seen this market, we respected earlier this week. This was late last week, and earlier this week we respected 78.6 within this channel formation. Market has really dropped. Okay, so there's still potential for further movement to the downside, maybe to respect this channel, get the lower channel bounce, the lower boundary, before we get any direction on this pair. So this is the pair that has been trending. It's unlike the other US dollar pairs. This one has really been forming that beautiful lower low, lower high, lower low formation, lower high, lower low, lower high. Okay, so you can see I'm watching this 1 2 3 4 5 wave movement. So this can come into completion around down here. Apart from that, the last pair that I'm watching is Aussie dollar, also just like GBP USD, sideways movement, a lot of sideways movement. We still have this pattern that we've been watching the whole week. Since last week, we're still within this sideways movement. So I don't have much on this one. The market hasn't really been moving in any direction. There's still money to be made within this channel, I mean within this ranging market, but that's for the people who like ranging markets. According to my analysis, the way I trade, I use Elliott wave analysis. So I'm normally looking to trade impulse waves. So those are the best trades for me. I don't like participating in correction moves. So that's all I have for you guys on this one. Dollar index, it's very good to watch dollar index because it gives an indication of how most of the dollar pairs are performing. And as you can see, we're sort of also in this ranging market. So you can see I've highlighted mine. I've written ranging resistance, ranging support. So we're still within this ranging market. Market hasn't broken. There's a lot of confusion happening over here, fighting between the bulls and the bears. So sometimes it's better to wait and see who will win between this fight. If it's the bulls or the bears, then you bet on that direction of whoever has won. So mainly today we might get maybe look at spikes. I'm not sure, but mainly the trades are mainly for next week. This week has just been a massive consolidation of most of the market. So that's all I have. Can we look at other pairs that I don't have, and then we can end the review for this week. So that's what I'm mainly watching. Yeah, so that's what I'm mainly watching, and as usual, ask any questions you want. We'll answer for you guys at the chat room. So with that said, I'll leave the floor to Ken. He'll look at a few pairs and then he'll end the meeting there. So peace.
So good morning guys, it's on Friday, the last day of the trading week, and this is week 2 of August. So not much has happened, especially for us. So just like Caleb, for me I had 2 or 3 positions in the beginning of the week which didn't turn out as I expected, and I lost about $150, which is not a lot of money. And for now I have positions. I'm holding on oil. I have gold. I have gold longs, and I also have GBP USD longs. So but both of those trades are not really very good trades, so I won't do much sharing about them. So let me just go through the main ideas that I have, the gold and then the GBP USD. Then I can go through some simple concepts about pivot points, because someone was asking about them the last time we were here on Wednesday. And if you want to learn extensively about pivot points, I think they are covered on the book. So there's a whole chapter on the book, on the technical analysis section, where we digest the tool, we give you all the backtesting we have done, we tell you how we use the tools, and it's a really reliable tool. That's why we keep on using it. And yeah, that's it. But I'll just give you a basic introduction of what is behind the pivot points, what we watch and why we use them, and how you can use them also. But basically I won't go deeply into the topic, because obviously an hour is not enough, or even 30 minutes for me to go through everything. So straight on, I'll jump to some of the pairs that I had for this week. Okay, so where do we start? Let me start with Euro Yen, which I think was one of the pairs that did really well. So Euro Yen, as I was doing the breakdown last week, I talked about a probable move to the, I was short while I was doing the breakdown, but I had the long perspective in my mind, so I wasn't surprised, because even I remember when I was doing the video, I told you there is a high probability that I was wrong, and clearly markets proved that I was wrong. So what ended up happening is we had this push all the way to the 126.5 level, which was the first upside target. I think there's still room, big room, for this market to keep moving. I'm looking for the euro to top at the 145 level. We are just in the beginning of a big bull market, and I think we'll be moving to 130 before we get any significant correction on the daily chart. So on the 4-hour chart, we'll obviously get minor corrections, which will serve well for entry and exit in the direction of the trend. So what are we looking at? So yeah, last week we had this week rather, we had this breakout, this pullback. So this pullback was the one which somehow confused me, so I also make mistakes, and I was not objective, so I ended up liquidating my positions. And you can see clearly after that the markets had a quick bull run all the way to the 126.5. I never came in long again at the 125.5, because the risk reward ratio was not as favorable as I wanted it to be, and I didn't think I could make as much money on this market as I wanted to. So I just had to let it pass and wait for next week. So next week we'll also be looking for longs. Basically, I don't think there's any possibility that this market will go below the 125.5. So I think we'll just get a correction probably to 125.5, 125.3 before the next extension, but that is for next week. Sterling, Caleb has covered sterling. I have a long position on sterling, which is more of a day trade. So we normally go to the 15 minutes time frame and try to look for day trades. So when I woke up and spotted this pattern, I decided to execute some longs. So I'm long on sterling, expecting the market to top maybe before the weekends at the 1.3170 level, which is 100 pips from where we currently are. And my stop loss just comes in at the 1.3040, 3030. So a risk reward of 1:3, which is not bad. So again, I have gold longs. So also gold longs is more of a day trade. So I came in yesterday during the New York session. So if you look at the daily chart, we had this steep down move, and then we had this respecting of the 1900 level, and this is a good bullish engulfing candle, which means you could still get some bullish momentum, at least first of all to 2000, based on what is happening on the daily chart. Then if you get a break of 2000, then we could probably even go back to create new highs, but failure to go above 2000 means that we are probably setting up ourselves for a big correction to the downside. But again, that's for next week, so we don't have much on that for now. In the 4-hour chart, basically price is still dangling above the 1970 1950 zone. So if you get this boost, which I'm looking for, and clearly you can see the candle structure is supporting that idea, then you could get this bullish move to 1975, 1980. 1975 is a conservative target, 1980 is too far. So I think 2000 is too far for the day trade, but 1975 is quite conservative. We might get there if we are right. On the 15 minutes time frame where I executed the trade, it's basically a trend line bounce or something. So if I just adjust this simple, these are simple basic trades, and I think the whole narrative behind trading is doing the simple things. So if your system is quite complex, I think you should change it. You need to be as simple as possible so that it's easy for you to make decisions. So yeah, this is the basic idea. clearly we are getting a third bounce. So if that third bounce is respected, we could see the markets move higher, at least to 2000. So I came in yesterday, and I think this is a good opportunity to scale in the event that this is broken, then get ready for a steep collapse, probably even to 1880, 1890 before the weekends. So that's the day trade for today, but I think the odds are tipped to the upside based on the candle structure from the higher time frame. So those are some of the markets I'm watching, and that's basically it. So the next thing that I'll do is try and go through the pivot points. So I won't do much introduction. So basically pivot points are all about finding, or I think rather trading is all about finding trends and establishing turning points on the trends. So pivot points help us do that. So we are able to know the levels or the areas where we expect value to be changing. And the whole idea behind trading is to identify the value areas where if price gets to this level, there's a 70% chance that sellers may be coming in and no one will be willing to buy at this level. If that's the case, then the markets are likely to go down. And that's what you bet on in the market. Most times, obviously, or sometimes you'll be wrong. So the best people in this business, again, with any tool that we will teach you, the whole idea is probabilities. If you're looking for a tool that will work 100% of the time, you still haven't gotten the understanding behind a trading mind. So for you to trade and to trade well, you just need to be right 50-60% of the time. Like for me currently, I'm just right 50% of the time, and I'm able to make money consistently. So what you need to do is to just balance when you're right with good risk reward ratios. But again, that's a lesson for another day. So we're primarily focused on pivots. So pivot points, you use them all the way from the monthly chart to the daily chart. So from the monthly chart, they obviously give us value areas for the big picture perspective. So if I just look at the monthly chart, I can be able to tell before the year ends, price is likely to dangle between these two levels depending on what is happening. Are we in a trending year? Are we in a, like for gold, this year has been a trending year definitely. And if you look at the pivot points, gold has extended above them and even moved higher to trade at the 2000 level. So I think that's the first thing that you need to understand. We use pivots in different ways. Like for me, one, I use it to try and time my levels, to refine my levels. So if I've drawn my levels, which I normally do using the quotas theory idea, I try and refine the levels using the pivots. So if I just click on the daily chart, maybe on this chart, we'll spot that most of the pivot points come in at levels which I had. So if I just make this full screen, clearly you can see the 1.30 level was in confluence with the R3 level last month. The P level is in confluence with the 1.2850. The R1 level was in confluence with the 1.2750. The P level was in confluence with the 1.25 level. The S1 level was in confluence with the 1.225 level. And if you look at how markets have been moving all the way since they bottomed at the 1.15 level, which I think was more of a false breakout, then we had a move higher, 1.2, 1.2250, 1.245, 1.25, back to 1.209, 1.2750, 1.225, and now we are dangling above the 1.3 level. So clearly you can see my levels are well aligned. The 3250 aligns with this level, the 3350, 34 aligns with this level, 35 aligns with this level. So the whole idea, again, like I said, is to find a trend and to establish turning points within the trend, or rather where price will try and get some balance, or where there'll be profits being taken out and maybe some other orders coming in. So that is one of the ways we use them. The second way we use them is to know if price is overvalued or undervalued. So obviously, looking at the way price is central pivot, that means price is at fair value, and it's at that point where we get many battles, many consolidations between the market. If price moves above the P level, we're likely to get a bullish move to certain extreme levels, probably R1, R2, R3. If price moves lower, we are probably going to get extreme levels to S1, S2, S3. If you have done your research about markets, you'll notice that markets don't move randomly. The whole idea behind markets moving randomly is a big scam. I think markets move to certain levels, but in the shorter, if you look at it from a minute to minute perspective, then it's random. But if you look at it from a year to year perspective, a month to month perspective, a day to day perspective, and you accumulate, you use 60, 70, 80 days, then you'll discover there was a pattern. There was somewhere where we are going, and these pivots now lead us to where we are going. So we do believe in looking at where price is going in the market. So for example, like I'll just use this pound as a good example, and I think this is one of the best things I'll do for you, because this is clearly, I'm going to give you clearly the long-term perspective on this pair, and then probably after 3 to 6 months we'll come and check it out, and then we'll see what has happened. So if we just start from the monthly chart where we normally start our own analysis, this is the whole process where we use to analyze markets, and this is what we teach you when you come to us. So if you look at sterling for the last 4 or 5 years, since 2016 we've been in a consolidation from a monthly perspective. Obviously there is no trend here, and clearly now you can see we had the first bullish move taking us higher last month, which was July. So there's a high chance, if I'm correct, if I'm right, and you look at it again from a 10-year perspective, we have been in a downtrend. So we came down, had a consolidation, which was more of a correction, then we had a move down, then we had this form of a consolidation. So what is likely to happen over the next 2 or 3 years or 4 years is sterling is likely to keep on rising and the dollar is likely to keep on collapsing. So that is the trend we are watching for now. And most of you want to trade and you don't want to do the back work, or you rather don't know these things, and you are going to lose money day in, day out if you have not done your research and you have a specific methodology for you to do some of these things. So like for us, we are looking for sterling probably to top at the 1.45 level before the end of this year. If you're right, probably early next year. But these markets are likely to keep on rising. Obviously, I'm not watching the 1.45 and then I won't watch this level. What will happen is instead I'll watch the 1.36, 1.35 level. If price gets to that level and it shows me that probably there'll be a correction, then I won't fight to the market. Instead, I'll exit and do what the market tells me. But if we break through the 1.36 level and keep on moving higher, the markets will likely move higher to the 1.345 level. So that's one thing that you already know as I'm trading sterling from a monthly perspective. So if I just switch to the weekly chart, which is the next chart, again you can see clearly now price here is quite different. So here I get more candles, I get more patterns, and I get to observe what is happening within them. So you can see like this one, we have sort of a triangle which Caleb normally likes to use, and they're also very reliable when they're telling you if markets are switching from ranging to trending, from low momentum to high momentum. So you can see clearly now we are getting that momentum taking us higher. So for me, short term, I'm looking for 1.35 on sterling, 1.4 on sterling before probably the next 3 or 4 months end. So in the next 8 weeks, 9 weeks, you will get prices to touch this level. And I just think into the daily chart and I do the same thing. I just look at where price is and where we are moving. So in this chart again, I have several patterns forming, but clearly we are dangling above the 1.30 level. And this tells me that probably if markets can be able to sustain prices above 1.3, we could get this move to this level. But on the way to this level, I have to watch what will happen here, I have to watch what will happen here, and I have to watch what will happen here. Again, if we get a move to the downside, I have to watch what will be happening at the 1.2850. I have to watch what will be happening down here at S1. So that's the whole idea when you're trading behind the pivot points. When you know price is above a certain level, you just watch what will be happening. I do the same all the way to the 4 hour, to the 1 hour, to the 15-minute time frame where I normally take some day trades. When you go down to the 15-minute time frame, I think when you're starting out, it's not as reliable for newbies, because there's a lot of noise, and when there's a lot of noise and when you're trading, you'll miss the objectivity point. So it's not really reliable for you to go down there when you're trading. If you want to trade and do it well and learn well, I think I'd advise you actually to stick to the daily chart and the 4-hour chart. That way you'll be able to spot many patterns and you'll be able to know when to come in and when to come out of the markets. So that's basically now the idea behind pivot points. If you buy the book, we have taken you now through the R3 levels, for example, what happens there, what normally happens there, to the P level, what happens there, to the S1, S2 level. All these things we have tackled them well. If you buy the course, we have now even done extensive videos covering all these aspects. If you, for example, if you're in the subscription, I know some of you are in the subscription, you have noticed that the one who's doing the videos currently just relies on that tool and has done it in a very good way. So he's sharing with you how to trade using them. So basically, that's a brief introduction of how we use pivot points. And I think if there's any question with regards to how we use them, I can answer it. But that's generally how we go about it. And before I end, I'll just tell you, focus on psychology. If you want to trade markets, much of what you'll need to learn is not what is on these charts. I think what is on these charts, everyone on this chat room today can learn, and everyone can understand that this is where I need to buy, this is where I need to sell. The big problem is knowing this is where I need to buy, this is where I need to sell, and this is when I need to stay out. And again, having the courage to hold on even when the markets are going against you. and having the courage to take your losses when the markets are going against you, having the courage to add to your winners when the markets are going to your side. These are all very different things, and that's the real art of trading. What we are basically sharing here is ideas and how we execute these ideas. But I think if you want to learn to trade, you need to focus on your mind, and you need to do it in an artistic way. So like Caleb says, he's more conservative and more aggressive. Someone else will be maybe in the middle, but you need to find a way to do things in your own manner. So you need to find a way to execute positions in your own style, which I think you need to devote some time. So that's it. There's no easy way out. Don't be lied to. There's an easy way out. There's no easy way out. It's definitely hard, but if you can hack the process again, you can make good money, which is there by the end of the day what we are all aiming for. And if you enjoy the process and the intellectual challenge again, it's a good thing to do. So I think that's it from me. I'll now pass it on to Caleb to clear the meeting.
Yeah, guys, I hope that was beneficial, the tips Ken has given on pivot points and about psychology. Apart from that, there's something we're starting, be meeting a few people next week. So if you want to pass by, there's a certain program we're starting. It's a free program. We'll be meeting people, meeting them here at the office. We just have a sit down for about 30 minutes or so, just go through some questions, which can be both beneficial to the both of us, understand your trading program, how you trade, your system and all that, your psychology. So it's something we're starting soon that will be helping traders understand the real business of trading. So if you're interested in it, please, you can message me and I'll be sure to know when to book you in, and we'll be meeting you guys one by one or maybe two by two, but mainly one by one because it's more of a personal one-on-one conversation. So if you're interested, please let me know and I'll be sure to add you in the group. So that's all for today. Hope you have a wonderful weekend, and that's it. We'll see you guys on Monday. So peace.